Alright, gonna try this video one more time, probably not gonna be as long. So we've got ES on a 20-year, just kind of wanted to go through this chart off of a longer term perspective after this larger move down we've had. So anyway, we'll go ahead and throw a fib first on the '09 lows up here into the current all-time highs. Go ahead and add, 23.6 is already on there. So we can see the 23.6 here, 24.08, 24.09 area. Still not even close to breaching that point. That is the first level of Fibonacci retracement and put on a longer time scale. So obviously this will be a major support point if we get to it. So let's go into time just a little bit more. We can go ahead and put one here at the 2016 Feb lows off of the election cycle. Go ahead and just put that in a different color, and it's blue. So we can see that the secondary 23.6 here in this month has already been breached at 26.77. This actually occurred here on Friday with the close below. I believe it was Wednesday, Thursday, Friday. Yeah, so we see price on Wednesday push down through this 23.6, recovers price. On Thursday, we see price runs up. It tests into the 6-month point of control up here at 27.25 and finds failure there as well. Pushes back down, and that 23.6 at 26.77 still supports price. And then on Friday we see price breaks down below that level, tests back up, and finds failure at that price on the recross. We can also put one more level on here. Could actually put a lot more levels on here, but we'll put one more level on here. 2018 low up here into the 2000 all-time highs, and we'll paint that one yellow. And we can see if we go into like a 6-month again, no, let's do 1 year so we have the whole range. You can see the low to high, and we see that the 61.8, this tertiary 61.8 at 26.88, 26.89 level, also acted tried to act as support there in the last 3 days and is now acting as resistance. Let's go ahead and put the 76.4 of the shorter term range on as well. The 76.4, not a lot of times you'll see price break through the 61.8 and the 76.4 at the same time, or within the same candles. Typically you'll see a bounce off the 76.4 to at least move up and retest that 61.8. 61.8 is a really big level in Fibonacci retracement. It's the golden ratio, and so for that reason you don't often see price just continue to break away from it. It'll retest it, try to take it back as support first, and if that fails, then you typically see that move from the 61.8 back down to retest the 76.4, a shorter term bounce, and then that flush back down there into the full retracement. So if we put it on a shorter term scale, we can see that action. This is a 5-day 15. We see on Thursday we break down the 61.8, price moves down into the secondary 23.6, tries to act as support multiple times, acts as resistance multiple times once it breaks below. As price breaks below, we see in the Globex session price drifts lower. We open the market on Friday, price tests down into the 76.4 at this 26.27 area. We get this tweezer bottom off that low, price moves higher throughout the rest of the day, tests through that shorter term volume, back up into the tertiary 61.8, pokes its head just above it, traps, and then we see that failure back lower through range. Also back through that secondary 23.6 as price moves lower throughout the day. In a shorter term sense, we can go ahead and draw another retracement here from the low. Let me change this color. We can draw one more retracement, and what that's going to do is it's going to give us the retracement levels off of this low on Friday into the highs on Friday. And these are our short-term levels. So the short-term 61.8, the one that we're going to need to watch first. The one we'll need to watch first, 26.52, should act as support. And just as a note, we can kind of see this action I was talking about the 76.4 on all-time ranges. So if we do establish this shorter-term cycle, we see once price sets this high, comes back, it fails the 61.8, comes down into the 76.4 here at 26.42.75, and again bounces up, tests the 61.8. 61.8 allows price up and through, and then we see that move higher. So short-term supports, 2660, 2652, 2642, and then recycle down here into the tertiary 76.4 at Friday's lows. On a longer term sense, let's go ahead and just take this guy off. On a longer term sense, while price remains below this tertiary 61.8 and secondary 23.6 at 2677 to 2688, I will be biasing all my trades lower. First target, obviously, the 76.4 and Friday's low at 2627. Below that, we'll look for that full retracement into February lows at 2529, and then the secondary 38.2 here at 2510 or so. Would expect a bounce off this level. How much of a bounce, we'll have to see when price comes down into it. And if we do lose that low, I think the furthest I think this market probably comes down is into this primary 23.6 at 24.08, as well as the secondary 50 at 23.74.75 or so. Nice little pocket of volume here, a larger pocket of volume than that above it, and I think that we might be able to see price support there. But again, I think we do see a bounce at the secondary 38.2 first at this 25.10 to 25.30 level. To the upside, we need to see price break up and over this 26.88 to at least start to consider positioning in a bullish sense. A lot of volume above that price, so I think 26.88 to 27.38, really just a consolidation type area. If we do see that, you can start positioning into individuals, but certainly not swinging the market through this area. This would be like by 269 to 274. Above that level, can consider a more bullish stance. We also have to consider that once a low is made, we need to establish a retracement level from the all-time high into wherever that low is. So assuming that Friday's low is an absolute low, we could do something like this with additional targets upside, resistance targets upside. But until we know that for sure, I mean, this could be, ranging as low as this. So we'll just have to watch and see if that low is set. If the low is set, then those are additional upside targets. We'll also need to watch for this downtrend that's coming from all-time high. It's pretty tight sloped, but for now it's continuing to act as resistance. So recap, really hard to get bullish until we're over 27.38. Bearish well below 26.76 to 26.88. Possible retest down here into the February lows or lower as support 1, and then major support 2 down here at 23.74 to 24.08. Hope this helps you out a little bit. This is certainly what I'm looking for. We can also look at these pockets of volume and notice that this node does venture all the way down here into this 25.29 area, and then there's just another node here. This starts right here at 25.10. So not really too much at risk here in terms of a longer term volume node or null on the chart. So that's certainly another tip in the bull favor. But until we can see price either test down into one of these major levels and hold, or break back up and over the 61 here at 26.88, it leaves me in a bearish camp.